Let's talk Nike, folks. Nike beating on both the top and bottom lines after the bell yesterday, with the company saying it posted its first ever billion-dollar quarter. But the stock did not react positively and actually fell lower. You can look at the stock right now, off a bit there after hitting an all-time high earlier in the day. Joining us right now to talk about what's next for the stock, Matthew McClintock. He is the senior consumer research analyst at Raymond James. Good morning to you. What was your big headline on this news, and were you surprised that the stock fell, or was just such a perfection baked into the cake?
Hey, good morning, everyone. So I think this is one of those situations where everything perfection baked into the cake. If you look at the stock in the week and 2 weeks before this event, the stock was pretty strong going into this event. They did beat on the top line. They beat pretty meaningfully on the top line. They came in at 13% constant currency revenue growth. That's outstanding for a company of this size. They also beat on the bottom line. They beat EPS. They came in at 70 cents. The street was at roughly 56, 57 cents. So that was a 13-cent beat there, too. So net, every single line item came either in line or beat. It's just the stock was strong going into this. And this actually appears just to be more of the same with Nike. Every single quarter we've had for the last couple of quarters, they've beaten meaningfully. The stock trades down after hours or pre-market, and then over the course of the next month or two, the stock trades up afterwards. So this is another one of the situations of buy the dip in Nike.
How concerned are you or not have you been about the China trade war situation and where we stand now?
Yeah, so I haven't been that concerned about it, and this quarter itself is a perfect example of why I shouldn't be that concerned about it. So Nike ate a 50 basis point hit to their gross margin from tariffs. Right, so their gross margin was up 20 basis points this quarter. It would have been up 70 basis points if you had excluded those tariffs, but they still were able to deliver gross margin expansion despite eating this tariff situation. Now, you combine that with their growth in China itself. There seems to have been no backlash whatsoever towards the Nike brand, a global brand, from China, with growth of 20% plus continuing in that region. And we don't really see any reason to expect a slowdown from any repercussions from this trade situation that's going on right now.
And what's your take on the change at the top? Obviously, there's a succession taking place here now with John Donahoe coming in to become the CEO. What does that mean?
Yeah, so what it means is John brings a wide range of expertise in the digital world. And Nike has made it very clear that the future of Nike is going to be digital. They have more than 100% growth in the Nike app this quarter. The sneakers app grew pretty meaningfully. They're getting extreme growth in digital, not only in China, but also in the United States and also in Europe, too. And so when Nike's trying to be forward-thinking here, thinking about how the consumer is going to shop, and they're bringing in expertise that actually can help get them there and make this transition to the future of retail versus how retailers historically have operated.
Final question, because you referenced it at the top, but I just wanted to come back to it, the idea of margins and what you think ultimately happens. I mean, you think this is just a blip on the margin story?
I think this is a blip just because of the tariff situation. Again, they actually expanded gross margin by 20 basis points. So that's pretty meaningful while eating that same tariff situation. But I think actually when we look to next year, there's a huge margin opportunity from the expense line. So Nike has been investing significant amounts of money in its digital infrastructure. And at the same time that they're investing that money, they're still running the old way that they used to do the business. And so there's some reoccurring costs here that Nike's going to be able to become more efficient with and cut back on as they actually start to make this transition in a more meaningful way. And so this quarter itself is a great example of that. They had 120 basis points or 130 basis points of expense leverage. The street was looking for flat. So they meaningfully beat on expenses, and I think that story is going to be here for at least the next year. And then once we get past this tariff situation, you're looking at 50 basis points plus, again, of gross margin expansion every quarter going forward.